Okay. Then also when you are doing a cost budget, you always need to think of estimated price increase in future. What normally we do is we base on the past year prices, but past year prices are not relevant all the time, right? Prices will continue to increase, salary will increase, fuel price is gonna increase, dollar to Myanmar kyat will also increase, so the prices definitely will increase of the goods. So when you are doing an estimate for the future, you need to put that into the account that the price will continue to increase. If you don't do that, then you are actually making wrong budgets, and you may not be able to estimate enough money, and you will need money in a very short period of time, correct? Because you have not planned for it. New technology solutions which may be available in the market. Nowadays a new platform are coming for all the time, right? So you may want to use these platforms or outsourcing companies who can do the business for you, so you can save the cost and save your time. Basically in every organization, that is we gonna learn basically probably tomorrow, that not every activity is important for the business. What is important for the business is the survival. So you may want to focus on the business activities which are highly important for you. So for example, in this case, in our case, where we want to do the projects, doing seminar is important, but organizing the seminar is not important, right? Finding the venue, is it important for the business? Let's say you want to do a seminar, right? So to do a seminar, you need to find a event space, you need to find the people to come. But is finding a place is an important aspect for the business? If the CEO is spending half of 1 day or 2 days to go and find a place, that's a waste of time, right?
Yes.
So you may want to outsource that job to somebody else, even though it may cost money, but it's less than the cost of a CEO doing the same thing.
Yes.
Correct? So you may want to think of some outsourcing where you don't really see is important for the business. So you can outsource some things which are like mundane jobs. We call them mundane jobs, which are not important for your business. So you can give the project planning, event management to somebody else. The person go and just train, finish, and you get the maximum results, because you can use that time to do something else which is more productive for you. Correct? So new technology or solutions can be available which is not yet adapted or will be adopted in the future. And also the new partners and suppliers. Even the new businesses are coming. The competition may increase, but that may become your partner as well. So you can partner with your competitor to survive in the future, to create a common value. Correct? Okay, so normally when you evaluate, when you do those things, you evaluate a different scenario. Which one is going to be the most favorable one for us, and then you draw your expense budget with timelines. Don't forget about the timelines, because it will help you to understand when you need extra money, and when you need to go and start finding the people, finding the bank, approach the bank. If you want to take a loan, if you want to go to an investor, then you need time for that also, right? It's not that tomorrow you find an investor, next day you will get the money immediately. It may take a couple of rounds before you actually get the money. You may have to convince them first, then negotiations, and then the documentation may take 6 months. So whenever you need money, let's say you need money for December, you need to start in June already, correct? But by the time also you will see how is your plan working out. If your plan is working out, good, then you can go ahead with confidence. If your plan is not working out, adjust your plan. Correct? Okay. So normally the expense can be categorized in 2 parts. One is capital expenditure, one is normal expenses. So capital expenditure means when you are spending money on new equipments, which is going to last for a very long period of time, and normally is huge, a big amount in terms of expenses.
So like in a company, like how do you define whether this is a capital expenditure or not? Is it based on a certain range of like amount? Like if it's like 5 lakh, then
No, that depends on the company size. So accounting definition says that if you are spending any money which is going to last for more than a year, it is a capital expenditure. But not every company want to spend and record everything into capital expenditure. Some companies, because some are very small things. So companies normally set accounting policy. That was our first class actually, to set up a policy that what is the range of amount that we consider as capital expenditure, and what do we don't accept as a capital expenditure. So when you are asking for money, for funds, normally even the big amount of spending, even though it may not be a capital expenditure, you can still put that as a capital expenditure because you need money for that. Okay, so normally when you may have, for established business, you can do a comprehensive list. If let's say you have a lot of departments, if you are single business, then you just make your own wish list. What do you think you want to have in your business? But not everything is important, right? First thing is you just make a wish list like you make on Christmas, right? Yeah, like a Santa. What do you want? What do you think you want? And then you evaluate each of them in different scenarios. So which one are critical for you? Means they will have your impact on your survival. For example, fire life safety things, licenses, your trademarks, patents, or anything which is mandated by government to carry out your business. That are mandatory, right? If you don't do that, your business will survive, will go out. Correct? Then another section is better to do it, because it will help us to save some cost or increase our revenue. Okay, so that is again something where we want to increase the business value. So you may want to spend some categorize some expenses which can help you to save money. And the last thing is, we are nice to have. If we have it, is better. If we don't have it, is okay, no problem. Correct? Compare Apple and Samsung. If you want to make a phone call, even Nokia, the keypad phone is enough for you, right? You don't need really an Apple. So that is nice to have. If you have it, very good. If you don't have it, just go for a key phone. That is 10,000 chat is enough. So that is how normally the business works. Normally you have a bootstrapping, right? So instead of going by the taxi, you can go by bus. The ultimate objective is to reach the destination. How you reach it doesn't matter. Okay, then you estimate your capital requirements for each category. If you have enough money to do all of them, good. If you don't have all of them, do the survival one first. If you still have money, do the better to do. Even if you don't have money, you can go and ask money on loan or from the shareholder, from the founders, or from the investors, because you can demonstrate they're gonna go benefit for your company, right? They're gonna save money or they're gonna increase the revenue for your company. So you can actually go and ask money for it. But the last, if you don't have money, just forget it. They are the last one to do, and you will not get money for them anyways. Okay. So accounting definition is any spending which is a useful life of more than a year, but you can set amount, whatever you want to say that we're gonna put as a capital expenditure. A limit may differ based on the business size, and can be for maintenance, it can be for expansion, expanding your business, expanding your capacities, and may require external financing. So sometimes, maybe for example, external financing not only in terms of investment, external financing can also come from like leasing.
You lease your property.
No, you lease somebody else's property. You can take the money on, you can take the building on rent. If you want, let's say, a heavy machine, you can ask them. They instead of selling, they can give you on rent. Correct? So you can have different ways of financing. You may rent it out, means you take the money, they take the equipment on rent, or you can lease them. You ask the bank to finance it, or you can borrow the money and buy it outright. So you have different options, right? So what you will do is basically you will create a scenario for all the three cases, a model for you, and then you can do it. Okay. Tomorrow I will show you how you can do the model to evaluate which option is better for you. Do you want to do a buy option, you want to do a lease, or you want to do a buying out or renting out? Okay. Then the last